makers and market movers. This is The Pulse with Francine Lacqua.
Good morning, happy Friday. Welcome to The Pulse. I'm Tom McKenzie in London. So President Trump says he will travel to Israel after the Israeli government approved a deal for Hamas to release its remaining hostages in Gaza in exchange for more than 2,000 prisoners and detainees. Israeli Prime Minister Benjamin Netanyahu called the developments momentous.
We're at a momentous development in the last 2 years. We fought during these 2 years to achieve our war aims. The central one of these war aims is to return the hostages, all of the hostages, the living and the dead. And we're about to achieve that goal.
Well, covering all of this for us, of course, is Bloomberg's Jumana Basechi joining us now from Dubai. Jumana, walk us through the latest then, how we got to this ceasefire, when it goes into effect and what to watch for then in the hours ahead.
Yeah, well, the ceasefire has technically gone into effect now. They were waiting for the cabinet to agree on it. The package was agreed to throughout the course of the night. And quite interestingly, as you were just showing there, on both sides of the Israeli Prime Minister, you had Jared Kushner and you had Steve Witkoff. They actually attended the cabinet vote. They were watching to see if there were going to be any holdouts. And of course, it did end up passing. But I think it's demonstrative of the fact that the U.S. really have invested a lot in getting phase one of this peace deal passed. So that has happened now, which means implementation will be due in the next couple of days. And what that means is over the next 24 hours, the Israeli forces, IDF, will be retreating to a pre-agreed yellow line. That still means that they'll maintain control of about 50% of the Gaza Strip. And the subsequent 72 hours after that, Hamas would then have to release the remaining hostages. And that is 20 thought to still be alive, 28 deceased. Probably a bit more difficult to retrieve the bodies of those who did die in captivity. But then that would be in exchange for up to 2,000 Palestinian prisoners and detainees. So all of that is going to happen over the next 72 hours. President Trump has said that he's going to be in the region, will be there around the time that the hostages are released. He's saying that that could happen around Monday. We're hearing that he may be flying into Israel and possibly making a trip to Egypt too. Still unclear what the president's plans are at this point, but we do know that he plans to come to the region and has also spoken about addressing the Knesset. So it is a very pivotal moment, but a reminder, Tom, that this is still phase one and there are still many questions left unanswered, including the questions surrounding Hamas disarmament, what that means exactly, the enforcement mechanism, future governance of Gaza, and where the funds for the reconstruction of Gaza later down the track are going to come from.
OK, so significant questions that still remain as we look at phase one being implemented. Part of phase one, Jumana, of course, is also addressing the humanitarian crisis in Gaza, and that involves more aid into the Strip. Where are we on that front? What is that likely to look like?
Absolutely, very important point, Tom, because as you know, the Strip and the population in the Strip have been suffering from malnutrition, a big percentage of the population suffering from famine. And this is something that has been flagged by the World Health Organization and really raised alarm bells around the world, the international community. The United Nations say that they are ready, they are prepared to immediately support several humanitarian efforts in Gaza. Tom Fletcher, the emergency relief coordinator for the UN, has said that they've mobilized up to 170,000 metric tons of food, of medicine and other supplies that could be readily provided into the Strip. They've also talked about providing shelter and even learning centers for children that have not had access to school over the past couple of years. Essentially, the war's been going on for 2 years now. Alongside that, and this was quite interesting, the White House press secretary, Caroline Leavitt, said that the U.S. are mobilizing 200 troops from their CENTCOM command to help oversee the implementation of the ceasefire, monitor for any violations. And the plan is for some security forces out of the Arab countries, from Egypt and Qatar, possibly Turkey as well, to participate in that security forces monitoring, just to keep tabs on what is actually happening on the ground. But still, at very, very early stages, as I said. And I think at this point in time, key is the release of the hostages in exchange for the prisoners, the facilitation of those humanitarian aids, and then later on some of those bigger consequential questions will be looked to be answered.
Jumana, thank you very much indeed with that update. Bloomberg Horizons Middle East and Africa anchor Jumana Pasecci. Thank you. Meanwhile, switching focus now to what's been a factor, of course, for these markets, but also somewhat idiosyncratic to one big name, Microsoft. Bloomberg learning that the company's data center crunch will continue for longer than expected, as many of its US data regions are experiencing shortages of physical space or servers, underscoring the software giant's struggles to keep up with cloud demand. It's a similar picture across Google and Amazon. Let's bring in then Bloomberg's AI reporter Sarita Rai, who has the details on this. Sarita, thank you for your time. Talk us through what this means for Microsoft, but also, importantly, for the broader AI industry.
So AI-driven cloud computing has been an undisputed area of growth for a lot of these players like Microsoft, Google, and Amazon in the last several quarters. For Microsoft, it's even more important, and it's a priority area because Microsoft Azure Cloud Division has contributed something like $75 billion of revenue in the fiscal 2025 and helped Microsoft outpace all of its competitors, Amazon, Google, Meta. So it's really an important area of growth, Tom. But quite besides this, in the broader picture, there's been a huge investment surge into AI-driven AI infrastructure in the U.S. Some $375 billion worth of investment being pledged in 2025 alone. Infrastructure is not being built fast enough. Old conventional AI data centers are being modified, but that is not happening fast enough to meet the demand.
And this all happening at a time, of course, Sarita, when the markets are starting to second-guess some of these investments, starting to second-guess the run-up and the valuations when it comes to tech. Talk us through how markets have been reassessing this trade.
Well, I think AI is certainly giving an extra layer of uncertainty to investors these days. The latest news being that, China is blockading completely the NVIDIA chip import into the country. The latest reports this week indicating that on the back of China banning NVIDIA chips, its major companies from using NVIDIA chips, China's customs officials are tracking and impounding any imports that are coming into the country. Now, NVIDIA is one of the key players in the AI supply chain. All of this, certainly adding much more, uncertainty to investors these days.
Bloomberg's AI reporter Sarita Rai, thank you very much indeed on the AI uncertainty and challenges for Microsoft, in fact, in building out its data centers to provide for the demand that it still sees from its customers. Sarita, thank you. Meanwhile, to FX and the dollar in particular, the greenback had a two-month high. Despite the continuing US shutdown, of course. That government shutdown continues. Traders in Asia and Europe say hedge funds are adding options bets that the rebound versus most major peers will extend into year end. With me now is Sam Lynton-Brown, head of global macro strategy at BNP Paribas Markets 360. And Sam, we will get your views, of course, on what's happening with AI and tech, and we'll go to France as well. But we'll start with the dollar, given the recent strength that we've seen. Is it your assessment that we're seeing a turnaround for the greenback?
We'd assess that we're seeing a positioning squeeze. The market had got quite short dollars, and we think the price action that we're seeing at the moment is predominantly a positioning squeeze. What's happened here, and as you mentioned, we may talk about the shutdown shortly. Yeah. There's no US data flow, at least not a super sort of tier one data release data flow there. So the dollar's being driven by factors outside of the US. We had a real political surprise over the weekend in Japan. We've had a resurgence of some uncertainty, although it's dissipated somewhat in France. And each of those factors has been broadly dollar supported. So it's really driven this positioning squeeze.
OK, so we actually have to think about France and we have to think about Japan when we're thinking about the relative strength that we've seen for the dollar. And to be clear, your view is that there's further dollar weakness to come.
Euro-dollar at 120 has been our target since Q1, and that's still our target. The key point here is FX is typically driven in the medium term by front-end interest rate differentials. The Fed's going to be cutting rates. The ECB, we think, is done cutting rates. We think it's going to begin actually hiking rates towards the end of next year. And so front-end interest rate differentials over the medium term are going to be supportive of euro-dollar going higher. Not to the same extent as we saw in H1. Yeah. Euro-dollar had a massive rally earlier this year, and we think the gains from here will be more moderate.
OK. And look, you touched on the government shutdown, as did we. Does the government shutdown make it harder or, let's put it this way, more likely or less likely that the Fed cuts in October?
More likely.
Given the lack of data? More
likely. I think the key point here is the Fed has started cutting rates because it's nervous about a downside risk materializing in the labour market. And therefore, it's an insurance cut. If you're flying blind, you need to keep buying insurance. So if we don't have a clear picture on the data, the Fed's going to cut rates in October.
The Bank of England putting out a pretty stark assessment in terms of the valuation that we're seeing across AI and tech and the risks of a correction, particularly in that space, and what that would mean for the equity markets. Are you worried about, are there bubble risks in AI that you're focused in on? Do you align with that cautionary tone from the BOE? How concerned are you?
Our call on US stocks is one where sort of the macro picture is we have a solid US economy and we have a central bank that's cutting rates, perhaps even with a somewhat more of a dovish reaction function than it should have, simply based on the economic data. So solid economy, dovish central banks. That supports risk on. So from a macro picture, that's bullish for stocks. You ask about valuation, and I think a key input here that I'd share is our positioning metrics. So at BNP Paribas, we run many proprietary quantitative positioning models. And what it shows for stocks is, of course, the market's quite long, but it's flashing amber, not flashing red. And when you have such a strong secular momentum trend that's at play in the US, we'd say you only really want to consider being super cautious once those indicators flash red. OK, so you're not there yet in terms of being super cautious on that trade. We've touched on France, so let's get your view on that. We may have a new Prime Minister announced as soon as the end of today. We'll see what happens. Various different scenarios still that could play out in France when it comes to the politics. On the risk, on the political risk, what is priced in at this point? And are you seeing any opportunities to add exposure to French assets? I think the key point here is that it seems there's a consensus to get a budget approved this year. That requires, constitutionally, one being submitted Monday next week. And that means the market can price out what it had been beginning to price in, the political risk that was embedded, which was this scenario in which the budget for this year got rolled to next year, i.e. no fiscal consolidation. That seems less likely now. So can there be scope for a rally in French bonds? Yes. There's a lot of uncertainty, though. We still don't know the composition of the budget. We don't know if it will actually get approved. We don't know where it leaves the deficit for 2026. So there's scope for a rally, perhaps to 75 basis points on a spread to Bund, but that would really be the most bullish picture one can paint for this year.
Is that rally contingent on reforms around the pension system in France being kept in place? Or if those are delayed, can you still see that rally precisely because it would enable a budget to be passed this year instead of next year?
The pension reform's key. I think the type of rally I'm describing of 75 bips in OAT bonds is really the most positive scenario. That's one in which the deficit for next year would come under 5% and the pension reform would remain as is. OK, so you need to see your deficit below 5%. Let's see if we get any more traction on that story in the next 24 hours or so. Before we let you go, you touched on the fact that the ECB, in your view, the ECB could be hiking in 2026. Is that a German fiscal stimulus story? What underpins that view of a more hawkish tilt from the ECB next year? We're positive on European growth. We have a forecast for 2026 of 1.4%. For Europe, that's really strong. Trend growth is probably beneath 1%. And as you point out, the real change here versus 2025 is indeed Germany. German growth this year is going to be relatively soft. Next year, we think it will be well above 1%. Combined with Italy and Spain that are likely to continue to perform quite well, that pushes the Euro-wide aggregate, we think, to 1.4%. So you've got above-trend growth, which over time is going to create some inflationary pressure, which in turn we think is consistent with an ECB that's done cutting, and its next move is going to be a hike Q4 of next year. OK, there we go. We'll come back to you on that, and hopefully before that point as well, to see if that plays out. Sam, thank you very much indeed. Sam Lynton-Brown, of course, BNP Paribas macro strategy at BNP Paribas Markets 360.
head of global macro strategy, with views there on the ECB, views on AI, and, of course, a touch in terms of where the Fed goes, given the lack of data that we're seeing out of the US right now, with the shutdown continuing. Coming up, the US-China trade war, meanwhile, has thrust rare earths into the limelight. We're going to be discussing these critical minerals with TechMet's Chief Strategic Development Officer, Helaina Matza. That is next. This is Bloomberg. Welcome back. So rare earths are, of course, among the most critical raw materials on the planet, yet few people had even heard of them, really, until the trade war between the US and China thrust them into the limelight. This week, China unveiling new curbs on its exports of rare earths. For a view on this, insights into this space with deep experiences, Helaina Matza, Chief Strategic Development Officer at TechMet and Senior Associate at the Center for Strategic and International Studies, someone who, of course, spent 14 years working for the US government in the State Department and the White House, and really central in terms of the Lobito corridor, in terms of the architect of that, which was linking, of course, Western markets to Africa's copper and cobalt production as well. So really, really fantastic to get you on with all of that experience, Helaina. We want to get into what you and TechMet are doing, but before we get there, can you just frame for us where things stand in terms of the supply chain story when it comes to crucial inputs into our new economy, whether it's cobalt, lithium, rare earths, the US and its partners versus China? Where is that?
Yeah, and Tom, thank you so much for having me today. So, look, this has been a really interesting story, but it's been unfolding for almost 20 years, right? And now the US and the West has been awake to it for more like 7, with this administration, the United States, really taking a turbocharged view, right? But if we look at the challenge with China, I look at it really from a few different perspectives. One is the current dominance, right? We see not only from China on the production side, but on the processing side, right? Whether that's rare earths, which is really a hot news story right now, something like 80% of rare earth magnets produced exclusively in China. But it goes across all of these critical supply chains, whether that's graphite anodes, which they have about 80% dominance, or cobalt itself, which 70% dominance. When you have that type of overconcentration on the supply chain, it creates complications and supply chain chokes in just natural situations. And now what we're seeing over the last several years is China willing to use that as a tool of a foreign policy. Just a year and a half ago, first signals with the germanium and gallium export license requirements. And then just yesterday, this sweeping announcement on rare earth export restrictions that will take place in December 1, right? And so we're all, over the last couple of days, trying to unpack what that looks like.
So, to your point, people like you, at least, have seen this coming for 2 decades. So what is the time for, on current trajectories, when, if at all, can the US and its allies catch up?
So I think the question is, what is catching up? Okay. And I think how the United States has traditionally looked at this, in the West in general, is not that China is out of this market, but that there's enough resiliency in this supply chain, and that we're able to be in a price environment where that investment makes sense in Western markets. And so we're seeing a lot of action right now to try to make that the case, right? Happy to talk a little bit about some of the things that we're seeing in the United States right now. One of them I think is really interesting. You know, the administration came in with a series of initial executive orders that were trying to do things to bring more domestic mining and processing back to the U.S. We saw a lot of permitting things move forward. We saw a lot of different opportunities for new investment to come into the energy space, all of that being accelerated. Then, of course, legislation with the big, beautiful bill that brought $7 billion to the Department of War, both in the strategic stockpile, but also in the industrial defense-based funds. So there's a lot happening. And then, of course,
these are the right steps. You welcome these measures?
I think so. Look, you know, my experience, you know, starting on this issue, even though I started in the Obama administration, I worked this issue all through Trump 1, through the Biden administration, and the beginning of the second Trump administration. And I think that you have to take a multifaceted approach. You need to be encouraging different investment at home. You need to find ways to incentivize, and it'll be interesting to see how these equity investments work. And it's also part of our story at TechMet, as we joke before it was cool. We received, the first equity investment from the U.S. Development Finance Corporation to help expand our portfolio outside of the U.S.
Do you expect the measures that the Trump administration has put in place to accelerate private capital into this space?
Absolutely. That's the objective, right? It's not the U.S. government's job, and I don't think this administration feels that it is, to totally subsidize an industry. But you need to put together the right public-private partnerships that encourage more private capital to move into these markets. What is
TechMet's priorities there? So to be clear to our viewers, TechMet, private critical minerals investment company. Are you looking to add to your portfolio in 2026 or double down on investments that you already have? What are the priorities for 2026?
Yeah, so look, a little bit of both, right? So, TechMet is a U.S. government-backed, Western-aligned critical mineral investment firm. Half of our net present value is in the United States, and we're working to bring those projects online. That's going to be a huge focus of 2026, whether it's the lithium project that we have in California that's using ex-China direct lithium extraction technology, or the work that we're doing in Zarion and Dayton, Ohio, which is trying to bring manufacturing for high-performing cathodes to the United States and commercialize new novel technologies to do processing of many critical minerals at a much lower cost. So that will be a big part of our agenda. But we also are looking ahead. And part of our relationship, given the relationship we have, like I said, with the Development Finance Corporation, has helped us expand into other markets faster. So we're looking at new opportunities, whether it's in Africa. We're participating right now on the PSA tender process for Dobra Lithium in Ukraine. So, we're very excited about the year ahead.
Is other private capital becoming aware? Because some of these jurisdictions are clearly risky areas. Is the concern around risk being offset by the overriding need to ensure that we have greater supply chain control over some of these crucial inputs?
Yeah, I wouldn't say it's overwritten, but I think what we're seeing is that these initial equity investments that the U.S. government's making is boosting markets, right? We've seen rare earth prices go up. We've seen some stabilization in the lithium market. That is going to continue to crowd in more private finance.
Okay, and very, very briefly on rare earths, do we rebalance versus China in the next decade? Is that even realistic?
Look, if this continued trajectory happens in the trade negotiations between the U.S. and China, we're going to have to find a way. And I think there's a lot of innovation happening in the United States to make that a reality.
Helaina, fantastic to get your insights. Thank you very much indeed. Helaina Matza, Chief Strategic Development Officer at TechMet. Coming up, political chaos on Japan as the ruling coalition collapses, throwing the LDP's grip on power under new leader Sanai Takaichi into jeopardy. We have all the details on that story next. This is Bloomberg. Good morning. Welcome to the Pulse. I'm Tom McKenzie in London. These are your top stories. Celebrations as Israel and Hamas approve a peace deal, paving the way for all remaining hostages to be released. President Trump says he will travel to Israel to welcome them home. Bloomberg learns that Microsoft's data center shortage will last well into next year. That's a lot longer than the company had previously forecast. Plus, Japan's prime minister in waiting suffers a major setback as her coalition collapses. Let's get more on that developing story and bring in Bloomberg's Japan economy and government reporter, Alistair Gale. Alistair, thank you for staying up late for us. What is the latest? The news flow out of Japan coming thick and fast. There is uncertainty now around what happens with this government.
That's right, Tom. This is still a developing story. We've had the Komeito Party, which is the junior party in Japan's governing coalition, which has really run the country for most of the last 26 years, saying it no longer wants to be part of that coalition. They're unhappy with the stance of Sanai Takaichi, who's the new president of the bigger party, the Liberal Democratic Party. They can't agree on policy issues, and they've said that it's time for them to leave the coalition. Now, she's still holding out hope that they can come back. She said that she hopes they'll have talks again next week and try and resolve this issue. And they really need the Komeito to be in the coalition. She's not yet the Prime Minister. We're expecting a vote later this month, and she's got a good chance. But without Komeito, it becomes a lot harder. And also for her policies that she wants to enact, it will become hard without Komeito. So this is a very big deal.
And we're seeing live pictures right now of the outgoing Prime Minister in Japan, of course, Mr. Ishiba, speaking in Tokyo. We'll keep across those lines for you, of course, when we get more details. Alistair, what can we expect? How does this unfold from here? You talked about that 1 month timeline in terms of how to think about Sanae Takeichi and her potential role. What are you and the team watching for in the hours and days ahead?
Well, what we're watching for is, firstly, whether they can resume talks with Komeito and find some kind of resolution to this. But also, she's now going to need to talk to the other parties, the smaller parties, and try and reach some kind of arrangement, perhaps with them for their support when it comes to the Prime Minister vote, which will be later this month. And then whether they are willing to work with her on policy implementation. So her political skills are really going to be tested now. She's got to go around all the parties and try and get the support that she can to form a government, to become Prime Minister. So that's what we're really watching for. We're expecting a vote on the Prime Minister to decide whether it's her or not sometime around October 20th, 21st. But before then, there's lots of horse trading that will go on.
OK, Bloomberg's Japan economy and government reporter Alistair Gale, who'll be across all of that horse trading for us, no doubt, as we continue, of course, to watch the movements with a slightly stronger yen on the back of the developments out of Tokyo. Alistair, thank you for that update. So from the politics and the uncertainty in Tokyo to the French political uncertainty, where the French president expects to appoint another new prime minister this evening. This after, of course, the resignation of Sébastien Lecornu. Bloomberg understands some business leaders attended a dinner last night with the head of the Socialist Party, which is seen as a kingmaker. For analysis, let's bring in Marta Lorimer, a politics lecturer at the University of Cardiff, with experience, of course, on French politics. Marta, thank you for joining us on this. Do we get a socialist prime minister in the next 24 hours? Is that the solution for Macron to get to a place where France can finally pass a budget?
We have no idea at the moment. This is the real problem. We know that is one of the options on the table. So essentially, there are two broad options here. One is to get another centre-right prime minister that is going to be a continuation of what we have seen so far. Or finally, Macron tries something new and decides to appoint a socialist prime minister, which is what the left has been calling for since in 2024 they were actually the biggest coalition in the French parliament. What isn't quite clear is how amenable is his own party and the centre-right Republicans to not vote against such a prime minister. The right has up until now always said that they would not accept a left-wing prime minister. Part of the reason for that was because the left was still a coalition including France Unbowed, so Jean-Luc Mélenchon's party. Things have changed. The left is now much more divided. Mélenchon would likely not be included in a government, and perhaps that is the kind of concession that we could see the right being able to live with.
OK, so that is potentially a workable solution with all of those caveats. If we get a new prime minister and we'll see what political colours they have, what is the time frame for getting a budget passed? Our previous markets guest was saying that there is now a higher chance that you actually get a budget passed this year versus next year. He sees that as market positive, potentially. Again, with caveats, we have to get there's a budget decision on Monday.
Yes, precisely. So in order to get the budget approved by the end of the year, the budget proposal needs to be submitted on Monday, on the 13th of October. And provided that is done, there is enough time for the Parliament to negotiate the budget, to debate, and then to vote in time for France to have a budget by the beginning of next year. And this does seem to be the most likely scenario. The reason for that is that Lecornu's mission was essentially to see if there was enough of a majority in Parliament to agree to not have an early election and have a budget instead. So this is why we're thinking that this is probably what is going to happen, that he's managed to find enough agreement that it's better to have a budget than to not have a budget. And it's better to have a budget than to actually have another election.
So what Macron reforms are most at risk then, right now?
The pension reform. The pension reform is probably the one that is most at risk, because it would be something that the left can really, really sell to their electorate. And they have said that this is, as far as they're concerned, that is the one reform that they want to see either stopped, completely paused, changed. So I think that is the one where we might actually see some movement. We've also seen the right move a little bit on this. So the Republicans, the Minister of the Interior, still says he will not support a government that wants to backtrack on the pension reform, but he's not the only person in his party. And within the party, there are people who are willing to make some concessions there if it means getting a budget passed in time.
What about taxes on the rich?
Taxes on the rich is another area where we might see some movement, particularly because this is, again, something that the left has really been pushing for. But I think that might be a little bit more divisive, particularly as far as the right is concerned.
Where does all of this leave Macron's legacy? He has until 2027, his term. The reforms around pensions were seen as key to his legacy. On many aspects, his critics will claim that he has mishandled the domestic political scene, certainly in the last year. What happens to the Macron legacy?
That's really the big question, I think, on his mind. I think Macron can still look at his years in power as perhaps something of a success story internationally. He was certainly able to make sure that France's voice was heard, particularly in important areas such as the war in Ukraine. But domestically, I think his second term has been, I would say, an unmitigated disaster.
How much of a win is this for the National Rally and the party of Marine Le Pen?
Well, the National Rally is interesting right now because, of course, Marine Le Pen is just continues to say, because Marine Le Pen right now can smell the blood. She knows that a new election is going to happen. This is probably going to happen before a presidential election. And she wants to place herself as the main opponent to the political system. But she's also in quite a difficult position because if there is another election and it happens early next year, for example, she might not be able to run. So she could be losing her current parliamentary seat because, of course, she cannot run for the next 5 years. And it's really unclear then how the National Rally stays relevant. I think they're certainly going to do well. But one of the reasons the National Rally is going to do well is because they're the only known quantity in many ways. But they still face a lot of rejection. I would like to remember that in 2024, a lot of people turned up to vote just to vote against the National Rally.
OK, Marta, thank you very much indeed for that analysis, of course, of what is unfolding in France. We may get a new Prime Minister possibly by the end of today. Marta, Lorimer, politics lecturer at the University of Cardiff. Thank you. Now to the Latvian Prime Minister, Ieva Helaina, who says that she welcomes the European Union's plan to set up a so-called drone wall along the eastern border of the bloc, but called the idea very raw. The EU is trying to create a system to stop incursion of unpiloted Russian aircrafts. This after a series of airspace violations and drone sightings that recently disrupted airport operations in countries including Denmark and Germany.
I think the idea is very just raw, if I may say so, because no one really knows all the details. We really need to cooperate together with other European countries because now the drone threats are reaching not just Baltic states, but Copenhagen, other countries of Europe.
All right, switching focus now to Klarna, where shares are higher in pre-market trading after it announced a partnership with Google Cloud to use AI to develop products and targeted marketing campaigns, including enhancing images. Klarna said early pilots showed AI had led to a 50% increase in orders. It will also use Google Cloud AI to prevent fraud and money laundering. And sticking with Klarna, the CEO has told me he thinks AI is about to have a profound impact on jobs that companies aren't ready to deal with. Sebastian Simakowski also told me that AI will reshape the banking sector, ultimately driving down what he described as excess profits. Here's some of my exclusive conversation with the CEO and founder of Klarna.
I think it comes back to the vision that we had at Klarna 10 years ago, which was very basic. It said, in the future, there will be a digital financial assistant. It will analyze your spending, let's say your mortgage, and it will say, like, that's too much. I found a better offer for you. The only thing you need to do is say yes, and I'll do all the paperwork and get it all done for you and save you the cost, right? So to us, this was basically where we believe retail banking was heading. And a little bit like self-driving cars, don't know when, but know that it will happen. And that's the future. And it has profound impact and consequences for the banking industry, because to a large degree, banks today don't need to be competitive because people don't want to switch. And it's difficult to switch, and they need to bring all the data and all that stuff. So they don't need to be that competitive. They don't need to be that great. And this would mean that in the future, customer mobility would be ultra high. People would switch to whoever gives them the most value for the least money. And it's going to drive down the excess profits in the retail banking industry.
Now, I know you think deeply about this as well. How do you see financial services, the workforce, when it comes to financial services, changing in the next, say, 5 to 10 years?
Well, I, for one, have been trying to be a little bit more honest about this, because I feel a lot of my tech bros are being slightly, not to the point on this topic. I think there is a massive shift coming to knowledge work, and it's not just in banking, it's in society at large. There are 8,000 people in Brussels that work as translators, and I would argue that most of that can be done by AI today already, even though obviously some quality assurance and so forth would still be valuable to have humans to review. But the point is that you don't need as many as we did. So there is a massive shift coming. I think society will have to figure out, what are we going to do? Because yes, new jobs will be created, but in the shorter term, that doesn't help the Brussels translator. He's not going to become a YouTube influencer tomorrow. So you may find other ways in how we support people from a society perspective. For us as a company, we have increased our revenue per employee from $400K to over $1 million per employee in the last 2 years. We haven't hired, we've a little bit hired a small recruitment, but generally we've shrunken the company from 7,400 people to 3,000 now. And that's at the same point in time while the revenue and number of customers has grown significantly. So we're simply not recruiting, which means that we can avoid doing layoffs. And we have taken a lot of the savings in payroll cost and reinvested that into an acceleration of the compensation of our employees, which means that they are seeing a huge benefit from us applying AI internally. So I think that there's paths in how you can make this work, both from a society perspective and a company perspective. But in the end, our job is here to drive as much value at the best possible price to our customers. And so we need to use these technologies to accomplish that. And then in general, I think there will be implications for a lot of knowledge-based work.
The Klarna CEO speaking to me exclusively for Bloomberg Tech Europe. Coming up, will there finally be peace for Israel and Gaza? We're going to be talking to Fawaz, Gerges International Relations Professor at the London School of Economics for his analysis on the Gaza ceasefire deal. That's coming up. This is Bloomberg. Ray Dalio, the founder of Bridgewater Associates, of course, has repeated warnings that US government debt is rising too quickly. The billionaire investor has long cautioned of the risks of spiraling US debt. On the latest episode of Leaders with Francine Lacqua, Dalio also said global conflicts and wealth inequality were helping to create a worrying environment.
We're in wars. Okay, there is a financial money war, there's a technology war, there's geopolitical wars, and there are more military wars. And so we have a civil war of some sort, which is developing in the United States and elsewhere, where there are irreconcilable differences.
So how do you see it being settled? Actually, where do you see the U.S. going? Does it get settled?
Either we will rise above it and realize that our common good is going to necessitate us dealing with it so that what works for most people is going to work. I think that's a little bit idealistic. I have to be a practical person. And I would say that I think that these conflicts will become tests of power by each side.
Well, you can watch the full interview with Ray Dalio on Leaders with Francine Lacqua. It is out on the Bloomberg website and on the terminal. You can also catch it on Bloomberg TV today at 5:30 p.m. in the UK. Let's return to the latest on the Middle East now. Following the Israeli cabinet's approval of a deal with Hamas, LSE International Relations Professor Fawaz Gerges says President Trump's Gaza plan is littered with minefields. He joins me now. Fawaz, thank you for your time. What is your assessment of the current moment in terms of this deal and where it leaves the prospects of peace?
Oh, thanks for having me, Tom. I think it's the beginning of the end of the humanitarian catastrophe in Gaza. The loss, the suffering, the pain, the famine, the starvation for 2.2 million Palestinians for more than 2 years. And it's the beginning of the end of the horror for the Israeli hostages and also the Palestinian prisoners. So it's a temporary relief. Do I really believe it will lead to permanent peace? Sadly and tragically, no. Do I really believe that what we have seen in the past few days will lead to a lasting peace, as President Trump would like us to believe? Sadly, no. Because I think what we need to understand, as you said, every point in President Trump, 21 point is a minefield. And we can talk about the various points and break them down for your audience.
Well, let's do that. What are the major hurdles to getting beyond phase one? We're currently in phase one. We're going to see the implementation. We're starting to see the implementation of phase one as part of this deal. Then we move to phase two. What for you then are the major roadblocks to getting additional movement there?
I think we should not really underestimate the first phase. I mean, I think this is very, very important because it's taken more than 2 years to bring about the end of the first phase, the release of all the Israeli hostages, 48 alive and dead, and also almost 2,000 Palestinian prisoners. So it's a moment of hope for both populations. But here is the first point. Do I really believe that basically Israeli Prime Minister Netanyahu will pull out Israeli troops permanently from Gaza? I have no doubt that he will not. And Trump plans does not really basically stipulate the removal of all Israeli forces from Gaza. In fact, based on the outline that we have seen, Israeli forces will remain, according to Israeli forces, in 53% of Gaza after the execution of phase one. Do I really believe that Hamas will lay down its arms and surrender? Of course not. I doubt it very much. Palestinian groups, there is consensus among Palestinian groups and people. They really would not accept the return of colonialism under a different pretext, that is a board of peace led by the United States President Donald Trump and former Prime Minister of Britain, Tony Blair. So in a way, what I'm trying to really say is that President Trump and his team and the Israeli leadership, their strategic priority were and are to get the hostages back. And as they should, right? That they really, everything else in Trump's plan, the details for them, particularly for President Trump, don't really matter, because President Trump is a transactional president. He likes to cash in. He wants instant rewards. And that's why he's going to Israel and Egypt either Saturday or Sunday in order to really celebrate his political victory, quote unquote.
What are the potential governing options for Gaza then, given all the caveats and all the uncertainty you've just outlined for us?
You know, Tom, there are 3 plans. There is the Egyptian Arab plan, and there is the French-Saudi plan that was basically voted by 142 states in the United Nations. And the French-Saudi plan combines elements of the Egyptian plan and the American plan. It calls for an active role by the Palestinian Authority and the training of Palestinian police and basically creating many committees to really empower the Palestinians, help to govern not only Gaza and the West Bank, but enable them, empower them, to prepare them to really basically help self-determination and a state of their own. Trump plan, I mean, look up Trump plan, if I were to summarize it, and I'm a bit critical of President Trump, but he deserves credit for this particular moment. But President Trump's plan is technical. It's not visionary. It does not really mention basic Palestinian rights or the right for self-determination. It's technical. So what I really would like to say, I would like to see a visionary plan, a genuine reconciliation between the Israelis and the Palestinians, a summit for peace led by the United States and Europe and the Arab state and the Muslim state and the United Nations in order to really bring about reconciliation, genuine reconciliation between Israelis and between Palestinians, because regardless of what happens, you and I were talking about Gaza. There will never be permanent or lasting peace in Gaza or in the Israel-Palestine conflict, even if we see President Trump's 21 plans basically develop further. So this is really what we're missing. We're missing the huge element of reconciliation, of really talking about taking Palestinian basic rights seriously. And again, final point on President Trump. What we know about President Trump, Tom, he's temperamental, he's chaotic. Will he have the attention span? Will he remain focused? Will he really basically keep Prime Minister Netanyahu's feet under fire? Because we know from what we have seen that only the United States could really pressure Benjamin Netanyahu in order for him to really stop the war in Gaza.
Fawaz, we see Jared Kushner has been on the ground there, and clearly he played a central role, the son-in-law, of course, of President Trump in the Abraham Accords. Is there a role for those who signed up to the Abraham Accords to extend that and provide some kind of infrastructure for that lasting peace that you've outlined?
Well, you know, Tom, I mean, I think we need to really again break down the Abraham Accords. The Abraham Accords, the underlying idea was that the Palestinians don't matter. The Palestinians were not taken into account. They were really not basically consulted. Because the idea was once Israel normalizes relations, top-down normalization with the Arab state, why would you reconcile with the Palestinians? So it was strategically flawed, literally, because in fact, the 7th of October would not have happened without the Palestinians coming to realize that the Palestinians were being thrown under the bus. And that's why I'm saying, I hope that President Trump relies on more seasoned experts in the State Department and the American political and intellectual community to realize that top-down normalization between Israel and authoritarian Arab state will not bring about peace. The only way to bring about peace, again, reconciliation, genuine reconciliation between Israelis and Palestinians.
Professor, we've run short of time, but we really appreciate your insights and analysis this morning. Fawaz, Gerges, the International Relations Professor at the London School of Economics, thank you. Up next, we're going to bring you Bloomberg Brief. We've also got the decision on the Nobel Peace Prize out of Oslo, Norway. This is Bloomberg.